Hi, guys. Welcome back to the pod. It is the day after what Donald Trump has called Liberation Day. The administration announced a bevy of tariffs, what they would call reciprocal tariffs. And so the market just closed with Michael Docupil, who is principal of SFC Capital Management, has a master's in economics from Baylor, and is also on the board of overseers at the Hoover Institute. Michael, what happened with the tariffs?
Well, these tariffs are quite a bit different than tariffs that Donald Trump did last time he was president, where they were focused on China. These tariffs had two major components: a component of 10% against everybody, against all countries, and then including those countries that we have a trade surplus with. And then they had for all those countries that we had a trade deficit with, the tariff rate was set at exports minus imports divided by exports times zero point 0.5. Half that
A
rate,
discounted tariff. Yeah.
yeah.
What they would
and
term a
and so
discounted tariff.
and so that yes, and so that is what they and that's what the tariff rate was for the rest of the countries of the world, including all of our allies.
Michael, the market just closed. It says April 3rd when we're speaking, recording. What was the effect on the market today?
Well, it was certainly not well received by the S&P 500, which closed down about 5%. Particularly shoe companies and things like that were down a lot. Nike was down 15% and whatnot. Interestingly, probably the best performing um, country, most of the globe was down significantly, but the best performing country was Mexico, which in dollar terms was up about 4.5% today. I believe the thinking being that nearshoring is probably the most viable option left.
I've heard that the primary goal, I've heard a couple of different theories of the primary goal, and I would love your reaction to this. I've heard that the primary goal of the administration is to reduce the 10-year treasury rate so that our borrowing costs are lower than they're expected to be presently. And to connect this with the Hoover Institute, Neil Ferguson has said that the end of empires comes when a great empire spends more on interest payments on its debt than it does on defense spending. So is the treasury rate the primary objective of these tariffs?
I don't know exactly what the primary purpose of these tariffs is. I actually think that there are two primary purposes. One, I believe the 10% tariff rate that is intended to be, I believe, permanent against all countries is it primarily intended to raise revenue and be a substitute for tax or to provide tax breaks. They've talked about it as funding the tax, no tax on tips and things like that. I believe that the higher tariff rates on other countries are probably designed as a negotiating tactic and to lower trade barriers. So I think that that is one of the somewhat confusing things, is that I do think they actually have 2 points to them. As far as the market reaction, one of the interesting things is short-term rates all the way out to 10 years really did decline today. The 30-year did not decline in the same ratio that it would normally decline with the 10-year selling off as much as it did. And yield. The 30-year did not decline as much in yield as the 10-year did, which is atypical for this type of move.
China's obviously in the center of view for this administration. Do you think this trade tariff hurts the Chinese export market more than it hurts the US import market?
Well, certainly the Chinese export market is much more important to China than importing things from China is to the US. It's a much bigger part of the Chinese economy than it is to the American, than Chinese imports are to the American economy. So one is much more important to China than US. And these are certainly problematic for China. How this is very different, though, than the prior time is there were a lot of tariffs on China, but many multinationals adopted what is called China plus one, where they made things in China plus one, at least one other country, so that they could shift production away from China. Most of those other countries were places like Vietnam or India, or even Taiwan and South Korea. All of these countries face very significant tariffs under this new tariff regime that Trump laid out yesterday. So there is not going to be the ability to have the same level of trade diversion from China to these other places in the same way. So these tariffs were definitely not designed to hurt China in the same way that the tariffs in the first Trump administration were.
Thanks, Michael, for the analysis. Markets are down after the Liberation Day announcement. After the trading day yesterday, markets are down roughly 6% in the indices. Michael, thanks for the analysis.
Thanks. Have a good day.